Financial is up in trade today after a good listing yesterday. So between yesterday to now, the stock has rallied almost 20%. After this 20% jump, what does the valuation mean for the company and how does it compare with peers? We have Gaurav joining in with the details. Gaurav.
Well, yes, HDB Financials is definitely in focus, and the reason being that this 1 lakh crore company has grown at around 20% over the last 4 years. And even when we look at the valuations and the listing, we saw company saw a listing at 13% premium, which was still trading at 3.4 times price to book value, and it still looks comfortable. And the reason being that there are some positives and negatives for the company. First, let's talk about positive. When we talk about gross NPAs, company has shown over the last few years, they have actually reported gross NPAs which were lower than its peers. Other than that, the product portfolio mix is very unique, and that is the reason why it brings company with a new perspective, with 73% of its loan actually linking to the secured loan portfolio. It gives upper edge to the company when we compare it with the peers. On the other hand, when we talk about profitability, there also we saw over the last few years, company has shown profitability growth of around 30%. On the flip side, when we talk about negatives, there are some factors which could act as a hiccup to the company. First is when we look at AUM growth, it is actually a little lower than we compare it with the peers. At 20%, we have already seen some peers growing at a CAGR of around 30% over the last 4 years. Second factor is the ROA. When we look at this profile, HDB Financial's ROA came in at around 2.2% for FY25. Again, a little lower than other companies. And the reason being that credit cost was a little higher. And from what we have picked up from the management commentary, credit cost is likely to stay at around 2%, which leaves a little upside for ROA. And that is another concern for investors. Now, considering all these factors, even at this price, when we look at price to book value, 1 year forward price to book, implied price to book comes at around 3.5 times, which is still comfortable. In fact, we also did a little bit of valuation analysis. Even if the stock is trading somewhere in the range of 1,000 rupees, which is 30% upside from its listing price, it will still give price to book of around 4 times, which is still comfortable, because when we look at other peers like Cholamandalam Investment and Bajaj Finance, they trade somewhere in the range of 4.5 to 5 times price to book. Another thing to point out here is that when we look at some media reports, it suggested that the unlisted price for HDB Financial was somewhere in the range of 1,200 to 1,300 rupees. Now, this price is a little unachievable at this moment, and the reason being that considering all these factors, the price to book, implied price to book for 1,200 rupees would come somewhere in the range of 5 times, which is a little difficult. But for now, it seems that the stock is trading comfortably in the price to book value of 3.5 times.
Okay, Gaurav, thank you so much for that analysis that is coming in on HDB Financial Services as well. Thanks so much for that. But on that note, step into a very short